Hey everyone, thanks for checking in for my SPY review slash preview. I guess it could be one and the same. But back in my, well, as they say in the day, when I was the head of trading at different institutional money managers, this is one of the things we would look at. Now, the traders are the eyes and ears into the market of a money management firm. You have various roles, portfolio managers, analysts, so forth and so on. But it's the traders who watch the markets. So it's the traders, generally the head of trading, basically conducts the Monday morning research meeting. And it's nothing special. It's nothing secret. No one's talking about, oh, let's go rip off retail guys, which doesn't happen. That's not a myth. Hedge fund traders really don't care about retail traders, nor do market makers. I believe it or not, I was also a market maker too. But anyway, one of the things we would do is go through the sectors. So if I look at SPY, the S&P 500, it's pretty much did nothing today. Pretty quiet, but this is good. Nice, slow move higher. You don't want things to go up too fast. I mean, it's great if you're making money, but things that go up fast tend to go down fast. Things that go up nice and slow, those are the healthy markets. But regardless, the S&P consists of 11 sectors, and this is one of the things that we would go through every morning. And if you trade SPY, you should definitely know about this webpage. Okay, SPY, obviously, it's the Standard and Poor's depository, Standard and Poor's depository receipts, maybe. I don't know. I forget the name, but there's a reason for it. If you trade SPY, you should know about this website. It gives you a lot of great details. One of the things is the holdings, and it shows you what the sectors are. And different sectors are in control of the market at different times. It switches back and forth. It's never the same. Let me just give you a philosophical or a hypothetical example. Let's pretend every sector is completely flat except for one of them. That one sector is moving ahead. Well, because it's part of the S&P, that would make the S&P 500 move ahead as well. If that one sector gets really overbought and gets to resistance, and there's a good chance it's going to reverse, well, then the whole market could reverse. It's never that easy, but that's just a hypothetical example. Now, these guys, real estate, material, utilities, they're so small they don't really affect the broad market. However, there's always there you could find trading ideas there, and I want to talk about the utility sector. Forget the Magnificent Seven, forget AI. Well, I'm going to use an AI anywhere. There are some ideas to be made or some money to be made, I think, on the short side in utilities. And when I say short, I don't mean short stocks, but if you're an options trader, and most of my students are, you got to start thinking about buying some puts in this sector. So we'll get to that, but let's just kind of run through these other sectors and let me show you what I'm talking about. Okay, technology, kind of slowly moving higher, testing short term resistance. Healthcare, second biggest sector. Nice little run here, kind of just neutral now as it consolidates. Financials, the third biggest sector, going sideways, not much to report there. Uh, Communication services, this is actually where Facebook and Google live in the market. They call them big tech, but technically, no pun intended, they're actually part of the communication services sector. But anyway, going sideways, consumer discretionary, moving up a little bit, breaking out of its recent trading range. And like I said, these are good markets that go up nice and slow, boring. Industrials, nice move up, consolidating, they go, taking a little time off, and that's cool, you know. And a market gets it's like a rubber band. If it gets too overstretched, it comes right back. If it goes nice and slow, it doesn't get really overstretched, and it keeps on going. Now, actually, let's look at consumer staples going sideways. Let's look at materials going sideways. Now, by now, you're probably like, why the hell am I still listening to this guy? Well, this is why. Look at the utility sector. Testing important support around this $60 level. In markets, certain price levels are more important than others. And when a market gets to them, whether it's a stock, a crypto, a ETF, anything, they tend to make reversals. There's a reason why the $60 level is support. It all started back in October. It was resistance. People sell, market eventually goes higher. A lot of the people that sold are like, oh, I made a mistake. If it comes back to my price, I'm going to buy it back. So you have remorseful sellers placing buy orders at the level that had previously been resistance. If there's enough of them, resistance can convert into support. Now, how is it possible that a level that was support can become support again? It's also because of seller's remorse. People sell and then the price goes higher. And a lot of them say, damn, I made a mistake. If I can buy it back at my price, I will. So after it goes way higher, comes all the way back, people that sold here are trying to buy back here. This is what we call market memory. Market memory refers to the fact, it's a fact, it's not a theory, the fact that certain price levels are more important than others. So I think there's going to be some trading ideas coming out of here, because when things get to an important price level, they tend to move. Like, look at this. Got to support for 2 days, big move higher. Got to support for 1 day, big move higher. It's like you come to a fork in the road when you get to an important price level. Now, let me bring this on to the next section here before I get going. But we can go to the same website as the spider, type in XLU, and we could see the holdings. And here are the companies that are within the sector. Now, if a sector looks weak, a sector, when we look at the sector ETF, that's just the average of the sector. So some of these things are going to be moving by less, some are by more. So the idea is, okay, we see that there's going to be something within a sector. Let's figure out what within the sector we should target. And I just showed you the top 10. This Dominion, Dominion, I'm having a hard time saying Dominion Energy. This looks pretty interesting to me. It's testing support. Support is this large group of buyers, people that are looking to pay at or close to the same price. So whenever the stock gets down to around there, there's people that buy. They put a floor under it. If the support breaks, meaning if the price goes below it, that tells us something. That tells us that the investors or the traders who created the support with their buy orders have left the market. They either finished their orders, maybe they canceled their orders. Regardless, if you take demand or buy interest out of a market, it sets the stage for a move lower. Now, notice how we're getting into these price levels here, where the last time we were in them, we gapped up. We ripped really really faster through these price levels. One of the main reasons why we have support is because of remorseful sellers, okay? Like we just talked about. Someone sells something at 100, it goes to 110. That person says, I made a mistake. If it gets back to 100, I'm going to buy it back. So remorseful sellers placing buy orders can create support at a level that had previously been resistance. When stocks gap or rip really fast or fastly, I want to say fastly, but I don't think that's an actual word. But of course, these days, anything could be a word. The fact that we went through it so quickly and we gapped, that means there just wasn't a lot of time within these price levels for there to be this big amount of vested interest to form. There wasn't a lot of people who sold who might be trying to buy their shares back. So if the sellers come in and start hitting this, they're going to have a hard time finding buyers. And as a result, they're going to have to offer their shares out at a discount. And that could force a downtrend to form. So principle about markets, if you go quickly through price levels one way, you spend some time consolidating, you reverse and you come back to those same price levels in the opposite direction, you tend to go back through them quickly as well. All right. So anyway, please make sure you check in. I put out a free newsletter every weekend where we go over all the sectors. And then during the week, I basically follow up on the sectors. And if something interesting is going on in the sector, we could look at the individual companies that are in it, or we could look at the industries that are within that sector. The idea is this: let the market tell you what to do. Don't go into it with a preconceived notion. Be a reactionary, play defense. The market talks. And if you know how to figure out what it's saying, and I'm not saying I can, some of the time I can, sometimes I can't, but if you play defense, that's how you make money. It's not coming up every day with some preconceived notion. Oh, today I'm going to trade Facebook. Today I'm going to trade Tesla. No, show up every morning and say, okay, what is the market telling me to trade today? Thank you, everyone, so much. And I hope to see you soon. But please make sure you check back because we do follow up on these sectors pretty much every day.